It's another week of Business Morning. Welcome to the program. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Let's take a look at what's in the news. AMCON's debt. It's interesting to know that the Asset Management Corporation of Nigeria is asking all agencies of the federal government and all stakeholders to join its debt recovery drive to guard against what it called the huge opportunity cost of not recovering its huge total current exposure. The corporation says its current exposure stood at 4.4 trillion naira. And according to a statement titled Risk of Not Recovering the over 4.4 trillion current exposure is bad for the economy, the colossal outstanding, going by the 2021 budget estimates, rivals the entire budget of the 36 states of the Federal Republic of Nigeria. The 4.4 trillion, which is owed AMCON, is bigger than the entire 2021 capital expenditure budget of the federal government of Nigeria, which stands at 3.85 trillion naira.
4.4 trillion. That's huge.
Massive.
I mean, if that figure is recovered, I'm sure it's going to do a lot in helping to, boost particularly small businesses.
Exactly.
All right, on the global oil market scene, prices fell this morning and renewed concerns about global fuel demand and strict coronavirus lockdowns in Europe and new movement restrictions in China, the world's second largest oil user, after a jump in cases there. Brent crude oil futures fell 42 cents to $55.57 a barrel after earlier climbing to $56.39, its highest since February 25, 2020. Brent rose in the previous 4 sessions. U.S. West Texas Intermediate slipped 22 cents to $52.02 a barrel. WTI rose to its highest in nearly a year on Friday. Still, the oil price losses were curbed by plans for U.S. President-elect Joe Biden to announce trillions of dollars in new coronavirus relief bills this week, much of which will be paid for by increased borrowing. Crude prices remain supported by Saudi Arabia's pledge last week for a voluntary oil output cut of 1 million barrels per day in February and March as part of a deal under which most OPEC Plus producers will hold production steady during new lockdowns. Ladi, good news for Nigeria. Yes, oil price at the point where it is, $56, $55. But the issue there now is what happens to fuel price. Exactly. Since the federal government is saying, look, when oil price goes up on the international market, then fuel price will go. So does it mean that perhaps fuel subsidy might...
I'm still struggling with the current price.
Does it mean that fuel subsidy might come back? We never can say that. But that's not what we really need at this point.
Let's look at aviation. This one's from the International Air Transport Association. It says growth in global passenger traffic came to a halt in November. IATA, in its latest report, said that demand measured in revenue passenger kilometers was down 70.3% compared to November 2019. It says demand remained unchanged from the 70.6% year-on-year decline recorded in October. November capacity was 58.6% below previous year levels, and load factor fell 23 percentage points to 58%. Its report titled Passenger Demand Recovery Grinds to a Halt in November. IATA's Director General and CEO, Alexander Dejuniak, blamed the drop on governments that opted for more travel restrictions, which impacted air travel demand. He says, and I quote, the already tepid recovery in air travel demand came to a full stop in November. That's because governments responded to new outbreaks with even more severe travel restrictions and quarantine measures. This is clearly inefficient, and such measures increase hardship for millions. He goes ahead to say vaccines offer the long-term solution. In the meantime, testing is the best way that we see to stop the spread of the virus and start economic recovery. How much more anguish do people need to go through, job losses, mental stress, before governments will understand that? I
describe that as government in dilemma. I mean, what do you do? The coronavirus does not move. It's the people that move the virus. So, I mean, government is cut in between. Okay, do we have to save the economies of this world? And then people get sick and die?
It's more
Or
like
do we
choosing
just
between the devil and
the deep blue sea? That's it. But let's just hope that God gives them the wisdom to really balance the whole equation. Okay, and back here in Nigeria, last week the federal government disbursed the sum of 5 billion naira COVID-19 palliative to the aviation industry as a way of supporting the sector badly hit by the COVID-19 pandemic. However, there seemed to be some kind of agitations and bickering over the sharing formula. Many have asked, what is the recovery strategy for this sector? What are the expectations for 2021? These and more will be discussed as Tayo Ojuri, an aviation consultant, joins us next.
And Mr. Tayo Ojuri joins us now, aviation consultant. Thank you for joining us.
Good morning, Mr.
Morning.
Ojuri. Good morning. Happy New Year to you. Good to see
same
you.
to you.
Happy New Year. So the aviation industry players called for a relief package, of which 5 billion was released as palliative. Now the sharing formula becomes an issue. What exactly are the concerns here?
Let's go with the backdrop of how much was reserved, who got what. It actually puts things in perspective. The airlines, it was 5 billion, 4 billion went to the airlines. And out of the 4 billion, 3 billion went to the scheduled airlines, 1 billion went to the unscheduled airline, and then you had the about 500 million to in-flight service providers. Then you had the car hire service at 100 million. So you had that breakdown. But what I think the bickering is about is with the airline operators of Nigeria, where they said airlines that are up under government management, i.e., Arik, Aero, and Ibom Air, should not receive it. So that's something that is that's a core challenge for the bickering. That's where the issue erupts from. But should that be an issue? I believe it's a lot of drama. There's still lots of real cost of the issue and operational challenges that need to be addressed. And the 4 billion in itself would not address anything. It's a drop in the ocean. So that should not be a distraction. Rather, we should look at what is life after this 4 billion. How will the airline survive in light of high forex charges, high operational charges, the cost of even paying staff at this time? Because we've seen the reduction in passenger traffic. We've seen and we're experiencing increase in the second wave of COVID-19. So we don't even know what the forecast is within the next 3 to 6 months. So that's going to affect passenger traffic. We already have PTF that's put an embargo on the number of people that are going to work. Lagos States have done that as well. So with all these restrictions, it reduces traffic. The demography of those that would need to travel and that would travel is being dissipated. Over and beyond that, people are more comfortable with doing business with technology and with addressing all their transactions with technology platforms rather than traveling. So all that should be the focus on life after COVID-19, or what will happen to aviation sector in Nigeria in 2021.
Because people might actually get used to doing business like this and not traveling.
Of course, and that brings us to the issue of the 2021 budget. All right, we'll look at the figure there that was set aside for aviation, about 79 billion. So with all the issues that you have raised, and you did mention what's happening in the foreign exchange market, and looking at this figure, how realistic is it that this budget is going to see to the recovery of this sector that we're talking about this year?
When you look at aviation, aviation is a catalyst to the economy. So what that budget, and in my opinion, should focus on is the infrastructure, not the airlines. The airlines are private entity. Aviation sector has been liberalized since the early 90s. So it's for us to actually, one, drive up policies that would ensure that the domestic airlines, which are actually 100% privately owned, are given tax incentives, structured loan guarantees, that would actually drive that sector and make them robust and buoyant in light of the new normal, restructure them. But what should the government now do with that budget? Ensure the infrastructure in terms of the airport services, the security services, the safety services are in place so that we have optimal, safe, secured, commercially viable airports.
So sometime in November, the Senate approved a 50 billion naira bailout package for the sector. What is the status of this bailout at this point?
At one point, it was 50. At some point, it was 27. Yeah. But in all of it, we should actually look at what has been disbursed, which is the 5 billion. Yeah. With the 5 billion, this is what we are dealing right. We've actually received. Right. But let's be pragmatic and being realistic. Government is dealing with lots of other issues. There's the healthcare issue. There's the road and infrastructure issue. There's a security issue. Aviation is even determined and goes to a great extent with security exigencies. Because once it's not safe and secure to travel, the demography of people that want to travel is reduced to a huge percentile. Look at what happens in our sector. The demography of those, we don't have tourism. Nobody actually picks up their bags and say they want to go for tourism in Nigeria. What we have is 80% of business travelers. Those that come international travel or even domestic travel on the 3 locations. We call them triangular locations, which is Lagos, Abuja, and Port Harcourt, are actually business driven. So once we see that the business is affected with the security issues, that would actually affect aviation travel as well. So that's what we look and envisage within 2021.
Right. Now, you're talking about, I mean, the recovery strategy for this sector. Yeah, you did mention as regards the budget for the sector that should be channeled mainly to infrastructure development. Now, part of, during the presentation of this budget, the aviation minister made it known that national carrier is his priority. Should that be a priority at the moment?
In my opinion, and based on statistics, I to a great extent, I doubt if that should be a priority. We should have all the airspace that is automated. That would improve our overflights. That would improve the operational efficiency of even international and domestic airlines. International airlines will not be diverting from our airspace. That should be one. Then human capacity development should be another one. Yeah. And rather than the Nigerian airline, what I rather would say is a priority, which they've actually is one of a major part of the roadmap, is the airport concessioning program. That is in the works now. How far it's been gone, how much of the stakeholder engagement has been done with that is still leaves so much to be said. So I believe if we reverse that cycle, I believe the airport concessioning program, which has lots of its challenges and lots of people, the union stakeholders are against it because of the transparency and communication issues. If that is addressed, infrastructure, airspace management, as well as other infrastructural services.
And what about safety?
Aviation, all these are actually laid on safety. Once the infrastructure is there and optimal equipment is there, it improves safety. It does improve safety.
So looking at COVID-19 and vaccines in the horizon, what's your outlook for the sector for 2021?
Outlook for a vaccine we thought will be the magic wand. Unfortunately, it's not.
Well, the vaccine is just being rolled out, so there is still hope.
There is hope.
When I said magic wand, we were looking at the statistics at the third quarter of 2020, and we said vaccine will come last quarter, so that people will start picking, passenger traffic will pick up first quarter. We thought that would happen. But now with vaccine being set out, we still have this second strain. We never had that forecast or prognosis of the second strain last year. So now with the second strain layered over the vaccine, would actually have to reduce and address this spread. Once we, because that's where there's a mental awareness and people, that's where it's that mental knowledge is actually reducing the propensity to fly, which is a huge challenge. So even with the challenge, with vaccine, which has the challenges, and which I'm for, I think that would help us actually give them, the passengers, a lot of confidence. It's safe to fly. And with the vaccines being taken, they'll be able to go about their normal business.
All right, let's look at the single Africa air transport market. What's your view on that? And do you see that complementing the AFCFTA, in boosting trade and perhaps accelerating economic growth?
Yes, it's a 4.5 trillion naira market. It is massive. And with looking at those numbers, it would open up the market. It's good for business. However, how ready are we? Which is where the challenge is. The airlines, the aviation sector, we have the likes of Ethiopian Airlines that are really strategically positioned to do business. You find out even with COVID-19, they didn't get funding from their government. We had Rwanda Air got 150 million Rwandan money from their government. Ethiopian Airline is strategically positioned. Egypt Air is ready. So with the African free trade market, we'll actually see them coming in and making Nigeria the hub that it is, because we are geographically positioned.
But we don't have our own national air.
Exactly. But when they start with the terms of agreement and terms of engagement, when they start coming in, they are going to that's going to be a negative, and it's not going to be very good for local players.
Thank you very much, Mr. Ojuri, for your time. It's always a pleasure having you on the show. Thank you. We appreciate your time.
Please stay safe.
Thank you.
Thank you, and you too. Okay, and as Africa Continental Free Trade Agreement kicks off, the talk about Nigeria's readiness is still on. What role can the banks play in the implementation? The Managing Director, EcoBank Nigeria, Patrick Akinwoto, joins us next. And following the AFCFTA enactment, Africa's financial services sector, no doubt, will be relied on to provide the credit and support necessary for certain industries to move forward, particularly the infrastructure and manufacturing sectors, which will be at the center of Africa's development goals. How ready are Nigerian banks to play this role? Patrick Akinwoto, Managing Director of EcoBank Nigeria, joins us now. Good morning, Mr. Akinwoto. Thank you for joining us, and Happy New Year to you.
Good morning, and thank you for having me here. Happy New Year.
Thank you. You're welcome. Now, the AFCFTA offers huge regional market that is beneficial to all countries on the continent. How prepared are Nigerian banks to tap into this market and ensure the success of this trade deal?
Thank you very much. It's important to just get a quick overview. The Continental Free Trade Agreement brings Africa into global play as one market. Nigeria is the largest economy in Africa, about 15% of the GDP of Africa, which is about $3 trillion. And therefore, the participation of Nigeria is absolutely critical to the success of this agreement. The banking and finance sector has been playing a key role in facilitating economic activities in Nigeria and in Africa, and various key pillars have been put in place, ranging from adequacy of a regulatory environment that will ensure that we key to global standards. Second, capital adequacy has been strengthened since the previous economic developments about 10, 15 years ago. We are aware of the major industry reforms that was carried out in the banking industry. The development of payment infrastructure that brings the ability of both the corporates, the small businesses, and the individuals, households, brings them into an ability to transact and participate effectively in the economy by reducing cost of access, by widening access to finance, by deepening access to markets, because banks connect both the suppliers and the distributors within an economy. Now, looking at Africa, Nigerian banks or banks in Nigeria have been positioning. First, you have Pan-African banks that exist on the continent, and you have Nigerian banks that are becoming Pan-African. And when you put all this together, banks in Nigeria have been positioning to participate effectively in facilitating intra-Africa trade. Just for emphasis, Europe has about 67% of its economy intra-Europe. Asia, about 58% intra-Asia. North America, about 48% intra-continent. Latin America, about 20% intra-continent. Africa is currently about 15% intra-Africa trade. The 85% is the huge opportunity which Nigerian banks are set to assist both Nigeria and Africa to realize.
Okay, Mr. Akinwucho, do you think the continent is ready for this continental integration, given the challenges being faced by the current regional economic communities?
Well, perhaps there is no given time to be ready. The core issues are, is there economic rationale to go into a free trade area across the continent? The answer is yes. I just reeled out statistics about intra-Africa trade. So what that means is that 85% of the trade transactions of African countries are actually done outside Africa. That means our scarce foreign exchange is being sent outside Africa. That means investments globally is attracted into those markets where we are doing that trade. The whole concept of the free trade agreement in Africa is to look at Africa as one market, a market of over 1.2 billion people, a market of over $3 trillion economy, a market with opportunity for growth, and therefore the ability to attract long-term investment, long-term capital, mobilize savings, increase the economic health of the citizenry. I mean, the GDP per capita in the US is about $60,000. In China, it's over $10,000. In Africa, the GDP per capita is just about $2,000. When you look at all these factors, Africa is actually late in starting this. ECOWAS started over 30 years ago, and we see the integration of the economies within Africa. You have SADC, you have CEMAC in Central Africa, you have the East Africa Community. So various regional aspects of Africa have embraced common markets for the purpose of better economic performance. Nigeria, as an entity, given the size, is a regional bloc on its own. And therefore, the time is already past. What we should focus on is getting on with the job. We have the opportunity to bring all our SMEs, all our manufacturing companies, all our service companies, all our talented youth. The world is the world of youth going forward. Africa has more than 60% of its population in the youth class. A lot of entrepreneurs waiting to take on the global stage. The time is ripe. We should get on with integrating our economies, acting as one market, and realizing our potentials globally.
Right. Now, looking at the pivotal roles Nigerian banks hope to play, just as you reeled out, particularly in facilitation of the payment and settlement systems on the continent, in line with the aspirations of the African Union, do you see any downside risks there for Nigerian banks?
Well, The business of banking is primarily about risk management. So what we do in banking is we identify the opportunities, we identify the risks, and we take steps to mitigate them. Before now, to give you a simple example, 10 years ago or 15 years ago, if you needed to make a payment to somebody in Kano from Lagos, you did what you call up-country transfer. When I started out, it would take 21 days for a check that is written in Lagos and presented in Kano for a transaction. Today, it is instant payment. You just use your phone, your mobile app, or your USSD or internet banking. You select NIP if you're using internet banking. You make a payment and instantly the receiver has value and there is transparency because an alert follows. Let's move into international payments. Before now, if you want to pay your partner in Benin Republic, and I speak of this because of the experience we have in the institution where I work, you will have to walk through a correspondent bank in the UK, who will then transmit the payment to a correspondent bank in France, who will then send the payment to the recipient in Cotonou. So for every transaction Nigeria does with Cotonou, historically, somebody will earn revenue in the city of London, somebody will earn revenue in the city of Paris, and our own wealth is being used to grow the wealth of other countries. Let's come to today's reality. The payment system revolution in Nigeria is scalable across Africa. That is already proven. Create a payment switch. NIBS is a payment switch. In Africa, institutions, already a few institutions have payment switches. It should be possible to do transaction instantly, pay from Nigeria to somebody in Mali, to somebody in Senegal, to somebody in Kenya, to somebody in South Africa, to somebody in Algeria, instantly. Then when you talk of exchange of trade documents, the automation potentials today for trade platforms actually allows workflow movement of documents to be seen online such that intra-Africa trade can be enabled, can become a normal way, reduce externalization of cost of services from Africa to other parts of the world, deepen the maximization of the intellectual capacity that is available in Africa, take our tech companies, our fintech companies into the global stage, and make Nigerian and African financial institutions actually handle the huge trade transactions within Africa. And you see that from Pan-African banks. You see Afrexim. You see the Africa Finance Corporation. You see a Pan-African institution like EcoBank. This has been in the offing, and we are ready to take it to the next level.
Okay, looking at payment systems now, are the Nigerian banks in partnership with the AU or the various countries to achieve the objective of a seamless payment system under the AFCFTA?
Yes, in various ways. I mean, like I said, today it is already possible to make payments. I mean, EcoBank Nigeria is a member of a group, EcoBank across Africa, and payments are possible instantly and being done across today. You also have other Nigerian banks that have using various switches. Historically, you can see Visa has come to invest in InterSwitch. You can see new investments coming into eTransact. These are Nigerian payment platforms that are unicorns on their own now and creating the opportunity to connect with the likes of KenSwitch, connect with the likes of the switch in South Africa, in Northern Africa, and working with the likes of Afrexim, which has also been pushing the agenda of having a common payment platform for intra-Africa trade. So you pick those type of developments which exist, private sector banks, multilateral banks in Africa coming together and making it a seamless process that business is done within a 1.2 billion people market within a market of over $3 trillion, therefore facilitate investments in infrastructure, rail across Africa. I heard just before this program discussion on aviation. We have been supporting ASky, which is an airline that has been operating across Africa. The challenge in aviation in Africa has been, it's been easier to travel from Lagos to France to get to, let's say, Gabon, than to travel straight from Lagos to Gabon. This free trade and the common air agreement that comes with it will enable Nigerian airlines to easily transport passengers across from east to west, rather than from north to south, which is what exists connecting Africa to Europe and back to Africa. Now we want to do Africa to Africa. The likes of ARIC, the likes of aero contractors, the likes of all the various airlines in Nigeria have the opportunity now to become a common flag carrier and be able to operate across Africa. That we should make to happen so that we can deepen employment, we can engage our youth, we can facilitate trade, specialization, and export made in Africa goods, be it fashion, be it our creative industries, be it manufactured products. That is the opportunity, and that is where we are. I believe that financial institutions in Nigeria have prepared adequately, and the regulators are quite supportive. We see collaboration between regulators in Africa. It's typically called College of Supervisors, where they come together and commonly look at Pan-African entities. Remember, the likes of Dangote has been operating across Africa, the likes of GUA, and we have various other non-financial institutions that are already operating across Africa. The same way from other countries in the telecoms industry, in the tourism industry. We can now have a Pan-African tourism experience ranging from Kenya to Nigeria to the Maghreb and to South Africa. It is real opportunity, and the pillars are there. We should just have the courage to execute.
All right, Mr. Akinwuta, just a quick one before we'll let you go there. Now, non-tariff barriers have been identified as major impediment to trade on the continent. How do you think this should be addressed?
Well, I think the journey of 1,000 miles starts with a step. The whole idea is to identify those non-tariff barriers, and the protocols allow for the way those barriers are brought up and addressed. And every part of the continent is encouraged to record. There's an online portal, I don't have it right with me, where identified non-trade barriers are reported. And Nigeria will need to fast track the efforts it has been doing for in terms of ease of doing business to ensure that the various non-trade barriers that is encountered in moving goods and services are eliminated. The likes of UNWA has made a lot of progress in that respect. They already operate a common economic community, one set of rules, you register in one location, and you have access to operate across the various countries. ECOWAS has tried in that respect. We need now within Nigeria to remove those blockades that we know when you're moving your goods. Why do you then have to face blockage in the hinterland when you have already passed through the regulatory borders, where you have declared goods of origin, you have declared the value, you've paid whatever the agreed tariffs within this free trade agreement, then you should have direct access to continue your journey and to deliver your services. That is where infrastructure such as rail, such as the marine, such as the air aviation is very critical to delivery.
Thank you, Mr. Akinwuta. We appreciate your time on the program. Thank you. Okay, let's take a quick look.
Thank you very much.
Let's take a quick look at the trading activities last week, and I'm happy to have Eddie back on board. Eddie, Welcome back. Good to see you. Well, last week was a quiet one for the investors, and let's just hope that this week will be better. Give us an update.
Good morning, Jimmy. It's good to be back. Well, unfortunately, the first trading week in the new year began on a negative note, and that was due to profit-taking activities on bellwether stocks in the consumer goods and the banking sector. The all-share index was down 0.37% at 40,120.22 points, while the equity cap was at 20.978 trillion naira, and the activity level was mixed. Volume was higher, value declined, while deals were at 26,808 deals. Sectoral performance was also broadly positive apart from the industrial goods sector. But let's talk to David Adonwe, a stockbroker at Highcap Securities. Good morning, Mr. Adonwe. Thank you for joining us on the program.
Thank you. Always a pleasure.
Well, the first trading week in the year began on a negative note. Do you think that this will set the tone for, the next couple of weeks?
It may not necessarily set the tone. I agree with you that some profit taking has been going on in the first week of trading. And of course, it's also anticipated that entering the new year, considering the massive rally that the market experienced at the later part of last year, that the market will cool down and start a little bit of a correction. But I think we'll see a stable market situation with some little volatility up and down. And we'll have a market that will be dynamically stable moving forward.
All right, Mr. Doran, what are the opening calls in the market now?
Yeah, well, the market is still at early stage of trading. And so we may not be able to judge how it's going to proceed and then end. But so far, I think bids are firming up and transactions are rolling in. So market is quite active. The situation is fluid, and we may not be able to determine how it will end today. But I think activities are quite encouraging, and the market is looking up.
All right, Mr. Adonwe, thank you for your input on the program. Do enjoy the rest of the day. David Adonwe is a stockbroker at Highcap Securities. Well, Chimi, we'll just have to wait and see how the rest of the trading day goes. And Ladi, it's good to have you, discussing the markets with us now.
I know. Thank you, Eddie. So we'll take another quick break now, and when we come back, we do an opening call to London. Do stay with us. And now for updates from the streets of London, let's talk to Juliana. Hello, Juliana.
Good morning, Laddie.
Good morning. So small businesses and manufacturers are bracing for a fight for survival this year. According to the survey, more than 250,000 small firms are expected to fold. Those are pretty grim projections there.
They are pretty grim projections. We'd had these projections throughout 2020, and unfortunately, England is in a third national lockdown, and there are so many concerns from business leaders up and down the country, basically asking the government for more support. This data that you're referring to is part of a survey that was conducted by the Federation of Small Businesses, and the Federation of Small Businesses is a body that represents about 200,000 firms. They did a survey where they spoke to about 1,400 small businesses, and they were asking them a series of questions, and one of them is, are you likely to survive over the next 12 months? And 5% of those that they spoke to said no. And what the data has done is just projected that to the 5.9 million small businesses in this country. And if that same sour statistic was applied, then that would mean about 295,000 firms would be going under. Now, Mike Cherry, he is the FBS's national chair. He basically said he welcomed lots of the support that Rishi Sunak, the Chancellor of the Exchequer, gave at the beginning of the pandemic, but they don't seem to be getting enough support right now when they really need it, especially because, of course, the Golden Quarter, which lots of people are expecting to reap the benefits of the Christmas shopping, just didn't come in this country. He said at the outset of the first national lockdown, the UK government was bold. He added the support mechanisms put in place weren't perfect, but they were exceptionally a good starting point. That's why it's so disappointing that it's met this lockdown with a whimper. So, you know, there has been lots of support. I believe the Chancellor did say that there'll be £4.8 billion worth of support for premises. So if your premises has been shut, so this is predominantly retail, leisure and hospitality, you would be able to apply for a £9,000 grant. But there are, of course, businesses that don't have those premises. There are businesses that are in office spaces that have workers on furlough, but you take away the furlough, what about the overheads? So those are the concerns that have been brought about in this survey.
Yeah, so and the online supermarket Ocado has become the first big retailer to warn of shortages of some products. It told customers in an email that there may be an increase of missing items, substitutions over the next few weeks. How worrisome is this?
Well, it depends. Got to be a little bit careful, especially because sometimes the British media do like to spin a story, and we don't want anyone going out panic buying, which is, of course, what the supermarkets are asking people to do. But in that email that you just quoted from, Laddie, the email also did say that customers may not get their exact product choice, but there is plenty of food still available. And this is down to a myriad of issues. It's not just panic buying, it's also Brexit. There has been a lot of shortages at the border, but also Ocado are talking about staff shortages and the fact that so many staff are sick, especially when it comes from the production line. And so producers are trying to, trying to streamline what they're getting out because they just don't have the amount of staff to get through these orders. The Sainsbury's boss as well, he's been asking for the government to start putting supermarket workers at the top of the COVID vaccination list because these are key critical workers. And if you don't have the staff to get the food out on the shelves, then people won't be able to get them. But this, again, is part of a wider discussion. There's something about those in the global north. Anytime there's an issue, they go out and they panic buy. I spoke to this with Bissy, I believe it was this time last week, because as soon as Prime Minister Boris Johnson gave that televised address to the nation about there being a third national lockdown, all of the major supermarkets, Sainsbury's, Tesco, Morrison's, Aldi, Lidl and Ocado, they reported a surge in the amount of people that were visiting their website, with some people waiting hours upon hours just to get a delivery to the door. But there shouldn't be any alarm because Ocado do insist that there is enough food for everybody.
Okay, let's hope there are no missing items. Thank you, Juliana. And do enjoy the rest of your day.
Thank you.
And now for debt and currency markets, Eddie is back on board. Hello, Eddie.
Hello, Laddie. Well, I'll be joined by another Laddie, Laddie Bello, a fixed income dealer at Access Bank, to discuss this segment of the market. Well, I think we've lost Laddie there. Well, the bond market began on a bearish note last week as investors, took profit in expectation of the Q1 2021 bond calendar. Now, at the end of the week, we saw yields drop at the long end of the curve, but then we saw yields, the average yield on that segment go to 6.63%. On Friday, we had 7 deals worth 2.47 billion naira. However, it's a different picture at the Treasury bills market. Activity has been quiet at the Nigerian Treasury bills market, at the CBN special bills market, and the OMO bills market. On Friday, we didn't have any deals on that counter. Hello, Laddie. Good morning. Thank you for joining us on the program.
Hi, good morning. Thank you for having me.
Yeah, I'd just like to ask what your outlook is for the fixed income market this week. I know the bond market has started on the bearish note now. So what should we be expecting from the bond and the Treasury bills market this week?
Okay, it was a relatively calm market closing last week, so we expect the same trend to persist into this week, simply because of the CRR debits that we saw on Friday last week. We also have a normal maturity tomorrow on Tuesday of about $250 billion in the Treasury bill space. So we expect the CBN to float a normal auction on or before Thursday to manage system liquidity. Because of the obligations the market players have to face in terms of funding, we expect a bit of a bearish opening in both markets, especially on the short to the belly of the curve within both the Treasury bills and the bond space. Also, we have an NTB auction, which is scheduled to hold on Wednesday by the DMO, where a total of about 232 billion will be on offer across the standard maturity buckets. So we expect to see mixed sentiments this week, with counterparties trying to take advantage of the uptick in yields that we expect to see stemming from the issuance calendar or the bond auction calendar, which hasn't been released for the month of January, but it should come out within the next couple of days. So what we expect to see is the DMO trying to borrow a little bit more than it borrowed in the fourth quarter of last year. And as such, we expect a slight upward trajectory in rates within the bond space.
All right, Ladi, thank you for your input on the program. Ladi Bello is a fixed income dealer at Access Bank. Well, Chimi and Ladi, you heard what Ladi said. The bond market is expected to see yields increase. So I'm sure investors will be glad, to hear that.
Of course, looking forward to that Treasury bills auction. That should be on Wednesday, and let's just hope and see how much subscription that would actually fetch. And well, talking about debt and currency market, of course, the equities. Ladi here is always keeping a tab on
Bitcoin,
crypto, Bitcoin in particular.
Exactly.
This is a new week.
Yep, massive drop this morning from 41,000 to about
that it closed last week.
$33,000.
You see why Juliana and I will not invest in this market.
Yeah, it's quite volatile. I know. Yeah.
I know. All right, that's a wrap on the program. Thank you for watching. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for watching.